So, welcome to this week's podcast. Let's discuss how the market has been behaving over the last couple days. So, I think the biggest thing we need to talk about is what's happening to gold.
Gold is crazy. I mean, gold has been on a resurgence, and it's been not just a small one, it's just been accelerating. I think obviously gold was something that I think at this point it's been like what, a month and a half of just us saying, "Hey guys, gold might be a
Buy
good
gold.
defensive asset."
Yeah, I know.
And the
Like,
saddest thing
like
is,
I
I don't think either of us actually ended up buying gold that one, did we? We sat
no,
there,
no,
yep,
not at all.
yep,
No,
yep,
no, not at all. And I think I'm clowning myself at this point because
yeah,
the running meme is we talk about how much gold is in printing, and then we just watch it continue printing.
without
We don't
us,
do anything.
yep, yep,
We
yep.
just yeah, we just buy assets that don't go up.
The funniest thing to me, right? I
So
think I don't understand. Like, you see, I've always understood why gold went up like what 35% since November,
yeah,
because
yeah,
it's a good hedge against the chaos that is brought in by the U.S. administration, especially around
yeah,
tariffs, especially around
yeah,
the changing economy. And we can see, right, I'm on the gold graph right now, and then every time there is some kind of chaos in the world, like for example, in January, February, we had the tariff scares. We saw gold rise all the way through April. That's when the market started to rise again. So we see the gold go up in that time period. We see the gold kind of going up now. I think that has to say something about the economy, and that's not good. And I think we also saw
yeah.
gold in March of 2024. I think that what was happening in March 2024. I remember there was some adverse
March.
events happening in that
Oh,
month as well.
I don't even remember at this point. All I know though is that right now I think there's some sort of recession indicator ongoing with the jobs report being quite bad on Friday,
Mhm.
and gold just responding to it even more so than bonds.
Yeah, it's been quite tragic, the job reports. I mean, we can pull up the job reports right now. I'm about to do that on my side. Um,
Yeah, let's talk about that.
yeah. So let's talk about the U.S. first. I think U.S. is the more important one. Then we can talk about Canada for a bit. So non-farm payrolls, 22K. Forecast 75K. That's a that's another
That's a big miss.
huge miss.
That's a huge miss.
Huge
Yep.
miss. Because
Yep.
the last time the forecast was 110, and then the achieve was 73. This time,
Yep.
forecast was 75, already quite defensive, but then actual was 22. Okay, so I think the Fed was right. The labor market was a bigger concern than the inflation that's brought on by tariffs.
Yeah, and I think that the weakness will probably accelerate just because one, with immigration policies of removal of illegals, document the individuals, so you're taking them from the labor force, and also from the fact that the tariffs effects are still dripping into the economy.
Hmm. Every week, I mean, it's been like every month. It seems more like that. The effects are felt deeper and deeper, and I think the effects being on the labor market kind of makes sense, especially for the and over time, I think that might increase as the employment that was powered by the U.S. Canada trade, or employment that was powered by imports and export, and mostly imports, from China or like other manufacturing countries. So I think those sectors
Yeah,
were hit the hardest, and then obviously the number. I think that obviously that's the first market to be hit into the job market. The
yeah,
next market probably would trickle down into, right, secondary services, the services that are built upon the primary services which take the imports. So
yeah,
let's see what happens there. I mean, would
yeah.
do you think it's gonna continue to accelerate? I think so, right?
I think there will be some sort of acceleration in inflation because the products right now they're still being shipped, right? Remember, we had agreements with other regions and trading blocks with Korea and Japan, 15%, EU 15%, Vietnam 15%. And I think we have tariffs on China for 30%. So these products are beginning to roll in the later half of this year, and already from what I've read, in the in the agricultural business, for example, a lot of businesses are struggling to buy inputs like fertilizer,
Mm-hmm.
and their goods are can't be sold to other markets because those markets are retaliating, due to this trade war. So we're seeing huge disruptions in every sector across the American economy with no end in sight because there's still a lot of uncertainty because one tweet can change how a local farmer, for example, will invest in their farming business. So if you kind of scale that to other businesses that require even more capital um, investments, like tech companies or small businesses that import products from China in order to resell them into the American market, I find that very uncertain, and I don't know if the Trump administration can fine tune their policies to address these problems.
It's really tough. I mean, like obviously we're going to have to see how things play out, but I still think like as you rightly say, the effects just haven't been felt yet. Like they're for example today I was looking at car purchases for my family. And when we're looking at the inventories, there's actually an inventory shortage where the prices are going up, and obviously they're based on the current inventory. And as inventory runs out and they have to get parts and they have to get the actual vehicles from other places, um well, we're going to see how the prices shape out. And this is in Canada, so I can imagine how it's like in America for a lot of products from around the world. So it's going to be quite interesting to see what happens. Obviously, not very good for the producers, not very good for the consumers, especially small businesses. I feel the worst about small businesses. I feel like this is going to actually impact more business than COVID might. But I could be wrong on that.
I think you are correct in that assessment because during the COVID pandemic, everyone was in it together. So when you were distributing trillions of dollars of aid, right, with those like mega trillion-dollar bills that were passed during the onset of COVID, everyone got a stimulus check, and every business got some sort of emergency funding to get by an event that was affecting everyone globally. So there was political, okay,
Support.
like support, right? But
Yeah.
yes, it wasn't super unified, but everyone generally agreed that it was a global disaster and that unprecedented response was required.
Hmm.
This in contrast, like quite frankly, is a shot to the foot. Like this was and could have been prevented, but yet it's happening.
Hmm.
And unfortunately, the administration can't control the consequences that are rippling across the economy because every industry is different, right? When you're setting tariffs on steel, for example, it's not just the steel industry that gets affected, it's the car companies that have to import the steel to produce the frame. It's the toy company that needs to produce the steel
Hmm.
to make a little bit of toys. It's the infrastructure builders, people that have to build out the cable wires for their AI data centers or whatnot. Those guys also require metals and minerals in order to make it happen. So each of these industries have different margins. Some are thinner than others. There is no one tariff policy that can actually solve this because one company can actually benefit from this. Some companies can survive because they have thicker margins, like
Or
tech
just bigger
companies.
books, right? There's bigger pockets.
Right,
Yeah.
right. Or but then you have like companies that are already barely surviving just the nature of their business, kind of like farming or small import businesses.
Mhm.
Those guys, I don't think any tariffs at all. There's no perfect number. Any number is bad.
Yeah.
So it's something that we're starting to see. ripple across the economy. And I think the reason why the labor force, the labor data was so bad was because most of the hiring that is usually done are done mainly by small to medium companies, and now you're seeing them being impacted, and they're freezing hiring.
I mean, not only are
You
they
don't.
freezing hiring, I think the worst part, I think, is they're cutting away positions that are
Yeah,
more designed for entry level, right? Because obviously
that's
these
right.
positions provide the least value. But I
Yeah,
mean, you kind of need these positions to train people to be your future senior and
that's
executives.
correct.
So
Yeah,
it's quite tragic how things go, but obviously, I think people look to labor markets as like the first thing for corporate restructuring. First, how do you
yeah,
save costs? Well, you restructure your company, you save a lot of jobs. Sorry, save a lot of costs that way by restructuring a lot of jobs. And so I think we're
yeah.
we're seeing that, and I feel like that's going to continue as well, moving into the next year and a half, maybe 2 years. I think more so because I think, as you said, right, as the costs are being realized, I think a statistic came to my mind, and I think I need to verify this, like fact check this. But I think if the statistic is every product, and I don't mean like just everyday product, I mean like a proper like appliance product or a gadget, anything like that that's like has moving parts, complex, like an air fryer, for
Mhm.
example. I
Yeah.
think those products require between 7 to 15 trips around the globe to assemble the product. As you said, we might need cobalt from Canada, we might need zinc from China, we might need copper from Australia, and so all these in raw materials, they are processed, mined different locations, brought together at different locations, and the components then are then assembled finally in one country. But for that to happen, usually they're like the parts themselves have to go to the around the world a few times. And so as we realize more and more that some countries, obviously I think US being the start, and I think US might inspire more countries in the future to have more closed policies. I think countries I can point to immediately are like India. I think those are very like it's a very defensive country. Um,
Yeah.
and so if that starts to happen, I think that's going to be quite a damper in global trade. And I think the American
I
market is going to definitely feel it. Like for example, right, let's say you're a small business. I don't know, you're like a McDonald's or like you're like Starbucks. Your coffee maker breaks down. Well, now you have to buy a new one. Surprise, surprise! Your coffee maker is 30% more expensive because half the parts have to be sourced from around the world. And so now you now have a extra expense and you were not factoring it at all. So yeah,
Yeah, exactly, right? And just tying this back to why I think gold and the market has been behaving the way it is, I think that the labor data has basically cemented that we're going to get like cuts this year. Like there's going to be a 25 bips cut on September, and there's probably going to be another cut around December. In
I'd be
fact,
shocked. I'd be shocked if there's no cut September.
yeah, exactly. And at this point, in my opinion, I think it's probably very hawkish if they hold and they don't cut, because the market will see that as saying you're willing to forsake the labor market in favor of inflation.
Hmm.
So so I don't know what Jerome Powell or the committee is thinking, right? But there is now signs that the market is betting on a 50 basis point cut
In
in
September,
September.
I don't know.
Right. Yeah. Like it's
I
like a ten
don't.
percent probability.
Yeah, I think it's 10% probability. I don't think it's any higher than that yet.
Right. It's definitely very slight. Like obviously, I think 50 bips is very extreme. But it really comes to show how we've moved from saying no way there's a cut, inflation's too high, to oh frick, we need like 50 BPS cuts now because the labor force is weakening. And I think that the market is starting to prioritize labor weakness over inflation. And that worry and that sentiment will continue becoming be it will continue becoming more predominant as the year closes, because there's so much fear around the tariffs and how it's disrupting employment. And I think that gold is responding to that, because why else would gold go up continually like this, even though the market hasn't, experienced any significant pullback? And when I mean pullback, I don't mean like, oh, a 2% crash, right?
Right, of course not.
Like, I mean like a serious, 10 to 15% drawdown where you're hitting, close to bear market territory. The market is clearly in favor that rate cuts are good. The economy is doing okay to the point that it's okay continuing to go up. But then you explain gold. And I think that a lot of capital are being allocated, not just the hedge for the Trump administration's policies,
Just global
but also,
uncertainty, right?
yeah, but also the hedge for global uncertainty and recessionary fears.
Hmm.
And I think that if the next, NFP report gives you negative prints on the employment data, I think that's when you'll get the confirmation that we need more cuts and that the Fed would be too hawkish if they didn't. I think that anyone that is still worried about inflation, they're worried about the wrong problem at this
Yeah,
point.
I think we've been proven wrong in the sense that like labor market is definitely the number one thing to worry about um, at the moment, especially in America and like North America.
Yeah,
I think like
yeah,
next week also I'm just looking at the events that are happening. We have obviously like the core inflation data on like Thursday. Um,
mhm,
we have PPI Wednesday. PPI again could be quite important given that last month's overshoot. So maybe like
yeah,
the forecast is still zero point 0.3, quite shocking to me. Um,
yeah,
so we'll see what that looks like. I think we have some non-farm revisions. So, but I mean, what has me quite interested, right? I'm going to look at the Nasdaq now. Looking at the Nasdaq, I think we've been in a choppy market for like around 2 months
yeah,
now. Like I don't think we
yeah,
realized it, but like July 31st was the end of like the bull run. We've
yeah, yeah,
just looking at
yeah,
like the last 18 days. I mean, we
yeah,
have on our system we have like an experimental zone. This experimental zone is supposed to be like a resistance zone, and in choppy markets, it's what I'm dubbing as a zone of zero confidence. As in,
right,
there's no indication of how which way the price action will go. It can enter
yeah,
the zone and go to a high, or leave the zone and go for a low. So,
yeah,
and I think we've been here for the last obviously definitely month or so, more pronounced in the last 18 days, especially with
mhm,
every market release, every data
yeah,
release. Every day
yeah,
I wake up in the morning, markets are surging. I look at the data is sometimes good, the market reacts well. The data is
yeah,
sometimes good, and the market reacts like trash. So it's like a
right,
very confusing time. I think
yeah,
I think the market is reacting literally on a day by day basis.
yes,
And
yes,
so
that,
as the
uh,
data comes out next week, well, we have like 4 or 5 data releases. I think we should probably expect to see the exact pattern.
yeah. And pivoting away from the Nasdaq, because I agree with you that there's some sort of consolidation happening here. I think a big reason for this chop is due to the AI companies kind of popping down now, with NVIDIA leading the way.
Yeah.
You want to
Yeah.
talk about that?
Yeah, Nvidia. I mean, like, see, I feel like I'm not too worried. Obviously, Nvidia went from the peak of 186 or 185. What was the peak? Yeah, 185 basically, to like 165, and that's quite shocking. Especially after what came out from the earnings.
Yeah, yeah,
I know. I think amongst our group of experienced traders, we've been talking about the AI bubble. Is it collapsing? What's happening here? And I don't know. I don't know. I do you think there's reason to worry? I'm in two minds. I think obviously AI is overvalued. It's valued in potential, not
Mhm.
realized. Um,
Yep.
so I don't know. I don't know. I'm more of the thought like, yes, there's a movement happening, like a correction happening, dare I say. Uh, but I don't feel quite worried yet.
Yeah. So I want to talk about this a little bit. So I think that there's just consolidation on the semiconductors right now with AMD and NVIDIA.
Mm-hmm.
And I don't think the AI bubble has necessarily popped because when you see adjacent companies like Broadcom, for example, that literally ripped up,
Mm-hmm.
the market is enthusiastic about AI still. It's just that the leading companies that were dominating the AI bubble beforehand, like NVIDIA and AMD, they're now giving way to other companies. It's the growth is being more distributed to other companies who are rivals to these leading to the companies that are spearheading the AI bubble.
Mm-hmm.
We see Palantir, for example, having some sort of correction right now.
Mm-hmm.
Obviously, a company with 800 PE is gonna pop, right?
Yeah.
And I would say that it's probably still outrageously overvalued.
Yeah.
But you don't see like this crash where it gets a 50% haircut in 2 months. You don't
No.
you don't see that.
No.
Um, I I think people are realizing that hey, AI is here to stay. There are definitely a lot of rollout that has yet to be done, but it's not all going to happen within a year, and not all these companies will be generating
Profitable. Yeah.
20 to 30% growth every quarter or every year.
Yeah.
So I'm seeing a more sober reality in the AI sphere. And I think the leading indicator for that, actually, funny enough, is looking at how XLU is performing.
Interesting.
Because because the reason why I say this is that XLU is what is it? Is utilities, right?
Mm-hmm.
So utilities, in my opinion, is a leading indicator of AI power consumption.
Mm-hmm. Right.
So if you're basically saying, hey, AI is going to continue going up, there's going to be more infrastructure rollout with data centers and whatnot. It's going to consume a lot of power. So what should you see? You should see a lot of power generating companies like CEG and Vistra popping off, but they're not. They're just like topping right now. In fact, they're making new like recent lows every day
Right.
with fat red candles.
Yeah.
So I think I think companies see this and they're saying, yeah, you know what? I think it needs to cool down because I don't know if companies are going to continue relying on these power companies as much. So therefore, we should slow down this growth and reflect that in the price action.
Mm-hmm.
I've been wondering about this for a while now. I've been asking myself, why is XLU, drawing down nonstop over the last couple of months? And my conclusion is that it's AI related, and it's the market repricing just how fast the AI bubble is going to continue growing for.
I think like obviously like AI as a tech, I think is a little bit misunderstood. I think obviously the
Yeah,
potential is limitless. Um,
yeah,
but I think like the realization is quite slower. And I
yeah.
can I cannot talk about this like having worked at AI in like companies around the in Canada and whatnot, and multinational
Hmm.
companies. It's just that when you talk to the executives and we talk to like the people in charge, they have such a skewed understanding of AI, and
Hmm.
they in their eyes it's like, I will implement AI within 3 months, our company will be AI powered, and then we'll be
Yeah.
outperforming, make all these products. But I
Mm.
mean, it's the fact is, I think we're not there yet. I think we are a few years away still from becoming completely like a very AI heavy. And so
Yeah.
the AI that is in reach is only in reach of a few companies at the moment, and the few companies obviously have the biggest pockets, But even still, I would argue they aren't quite getting a return on their investment yet. So
Mm-hmm.
I think it's just going to be a case that, hey, AI as technology is revolutionary. It's here to stay. It's like Google, right? When Google came around, Google was huge. And I think Google still is huge. It's here to stay for a very long time. AI is the same way. It's just that it's going to take time to make profits, time to
Yeah.
realize what to do, and there'll be clear limitations. Some things are just not achievable. So we'll see how the market develops. I think obviously for Nvidia's, and in that case, I'm not too worried. In fact, I'm quite happy that there's more competition.
Yeah.
At,
I agree.
for the Nvidia investors, I do feel bad for you. Um, some of our colleagues are also Nvidia investors, so our hearts go out to them. But I think Nvidia will come back. I think this is just a short term action. We'll
Yeah.
see what happens there.
Yeah, and being honest with you, right? Like, I do think a pullback is necessary for AI
Oh yeah.
because it has been on a non-stop run for years now, right? For 2 to 3 years now. It's since the release of ChatGPT.
Hmm.
So I think that if markets now realize that, hey, let's be more realistic with the rollout of this technology, that just means that the future will be less volatile, more predictable. And if a correction does happen for real, it won't be an outright burst of the bubble
Hmm.
because markets would have kind of already foreseen that we have to be realistic with how fast this technology will mature.
Right. Completely agree. Completely
Yeah,
agree.
yeah. And I think we kind of touched on the most important points for this week, haven't we?
Yeah. The last one is like Bitcoin. Um,
Oh yeah, Bitcoin.
Bitcoin's a strange beast. Um,
That has been I think chopping, right?
yeah.
Like up and nonstop.
Do you think what's happening here is that people are rushing out of Bitcoin for gold? Do you think that's possible?
That's a really interesting opinion.
I don't think we
And a
talked
good
about this in our own personal time. So I mean, we can
yeah,
have a brief discussion here. I don't.
yeah, yeah. I That's not a bad like question actually. Like something that I've thought of is why is Bitcoin, a risk leading asset, not performing how the Nasdaq has been, which is basically chopping or just reclaiming its highs.
Mm-hmm.
And I think that you're on the right spot because when I look at Ethereum as well, which is its Bitcoin competitor,
Yeah.
it's also kind of been chopping and going nowhere. But we see like gold going up.
Yeah.
So I think that there is stagflationary pressure. We mentioned this before. Stagflationary pressure is exerting its impact on Bitcoin, and Bitcoin is definitely sensing that risk and uncertainty. And I wouldn't say there's a direct pivot of capital from just Bitcoin to gold.
I don't think it's
It's
flowing that
more
way. No,
like,
no, no. Yeah, it's
yeah,
like trickling through two different like sectors. Like it's rotating through
yeah,
like different sectors. But I agree with you. Yeah.
yeah, yeah. It's more like excess capital that people can spare are moving to less risky assets in case there's like a recession or there's extreme labor weakness. And we're already starting to see that because,
Especially in like other
yeah,
countries too, right? Especially in Canada, for
yeah,
example, we also had our unemployment rate data, and it was bad. Not only
it was
was the
terrible.
unemployment rate very as high as the Great Depression, as the Great Depression in the 1930s, and we also had negative 65K job date growth quotation
Yeah,
mark.
yeah, yeah, yeah.
So
So shed 65,000 jobs essentially.
yeah, obviously Canada's a smaller market, but there's still a lot of people here, right? So a tenth of
Yeah,
America's population. So, um,
yeah, yeah.
and I think like
I think
obviously around the world as well, things are quite interesting, the global development. So I think I can completely understand why gold is going up and maybe
yeah,
more riskier assets like Bitcoin are going down, despite the U.S. markets kind of stabilizing, consolidating, like fluctuating around the same price level.
yeah, yeah,
It's
yeah.
good.
So most of the jobs there that were lost were good quality jobs. Yes, most of them were part time, but they were from industries that were traditionally high paying, like STEM,
Mm-hmm.
construction, and manufacturing, right? So my biggest worry here is I think Canada's already in a recession.
Yeah.
Our central bank is not, I think, taking it seriously. They think inflation is still the problem here. But
Yeah.
you have a lot of young adults who are losing out on employment opportunity because there's no entry position jobs. Most of them are getting destroyed through AI or being lost due to tariff uncertainty policies.
Yep. Yep. Yep.
Yeah. Very, very sobering reality, unfortunately, for Canadians listening to this, especially for the young adults there.
I know. I think we should definitely probably stop here for today, though. We've already
Yeah,
been past our 20-minute goal. We're trying to keep the podcast just 20 minutes long, but some weeks just have so much content that we just have to talk about it. So
exactly.
I mean,
Yeah.
hopefully we'll have more time next week to talk about it. I don't think so because I think next week
Yeah.
we'll probably talk about the Fed decision. Isn't the Fed decision like February? Not February, September 15th or something? I think I'll have to look it up. But yeah, we'll definitely have quite a interesting discussion next week. Hopefully the
Hmm.
markets move in our favor and in your favor as well. And
Yeah.
I think we'll sign off here for today. Thank you
Yeah.
so much for listening and have a great day.